Hi, this is James Shoke with Westpac London's end of day report for Tuesday, March the 26th. A range of US data today, a bit mixed. We had a decent near 6% jump in durable goods orders in February, although it was driven by aircraft and defence, which reversed large drops in January with bounces in February. The core capital goods orders component was actually down 2.7%. Although that followed a 12% rise over the previous 4 months. New home sales fell 4.6% in February, but again that followed a much steeper rise in the previous month. In fact, the level of sales is up about 12% on a year earlier. Still goes nowhere towards recovering anywhere near the plunge in sales between 2005 and 2011, but nevertheless there is an uptrend in place. House prices up 8.1% over the last year, according to S&P Case-Shiller. Less positive was the drop in consumer confidence from 68 to 59.7 for the March reading on the Conference Board Index, and that matches declines seen in the IBD, TIPP and UOM sentiment indices for March. The Richmond Fed factory survey slowed from 6 to 3 in March. Compare that to a year ago, it was running around, well actually in February, March last year, slowed from 12 to 7. So the sort of turn of year sort of upswing in that factory series is not as impressive as we saw in 2012, and indeed not as impressive as in 2011 or 2010. So though the series has been back in positive territory for a couple of months now, it's still not really indicative of a particularly robust US economy relative to where it's been in earlier years in this recovery. The CBI retail survey for the UK showed the weakest reading in March since August last year, and in fact that was held down by the Olympics. The previous weakest one was back in April, but there was the Jubilee going on back then. So given there were no special factors at play in March, other than really the freezing cold weather, does look like a pretty weak retail report. So that's the data today. The markets are mostly higher. The Dow's up 0.8% at the moment, 14,559. The S&P 500's just shy of its record high a week or two ago. European markets mostly higher. The London market up 1/3%. French market up 0.5%. The Germans up 0.1%. But Spain and Italy both down between 1% and 2%, led by the banks, with ongoing concern about runs on deposits because of the comments by the Dutch finance minister yesterday, the head of the EU finance ministers group, who said that using the deposits of the Maltese depositors who had deposits of greater than 100,000 euros, using those deposits as part of the bailout package, that being the template perhaps for future bailouts in Europe, that continues to weigh on banking stocks in those problem economies. Commodity markets, gold's down 1/3%, $1,600 exactly, still losing a bit of its safe haven status, I think. Copper prices up 1/4%, oil's up 1.5% at $96.27 a barrel. The Aussie dollar is at 1.048. It almost hit 1.05 today, but still higher than it was this time yesterday. And the Reserve Bank of Australia puts out their financial stability review, their 6-monthly assessment of how things are going in the finance sector, and in terms of household savings, in terms of everything that makes the economy tick, basically. So not so much a report on the economy, but on the financial side of it. Okay, that's it from me. I'll be back tomorrow.